It's easy to panic when you're faced with the possibility of losing your job, but there are ways to manage your finances while navigating through this time. To tell us more about how to cope, we're joined by financial planner Rita Kool. Morning, Rita. So let's talk about this. Let's talk about how we're going to cope financially if you're facing retrenchment. Firstly, I suppose, if you are facing retrenchment, I think we need to sort of make people aware of what they're entitled to, I suppose, if they're facing retrenchment before they make plans for that money. Yeah.
So the first thing I want to tell people is don't panic. Okay. You're not the first person that it's happened to. It's not personal. It's a company decision, and it happens to a lot of people. So just calm down and start with asking people for help. And that is financial advice. Yeah. And it would be making sure what all your options are. You are entitled to at least 1 week's worth of income for every year that you've worked there. Okay. So that's the bare minimum. It doesn't say that you have to agree to that. You can ask for more, and a lot of time the bargaining councils negotiate for more. But that's the bare minimum that you'll get. Then you're also entitled to access your pension or your provident fund. You won't be able to access retirement annuities, but I would like to caution people, please, if you can, see if you can not touch your pension or provident funds until much later. So if you do that budget, you can see how long your package will be able to last, and then you can make a decision on your pension or provident fund.
What are the implications of tapping into that? And I know there are some major tax implications also.
Yeah. So first of all, your package is going to be taxed, and it is going to be taxed on the same tax scale as what your pension or provident fund would be if you take that in cash at retrenchment. It's the same scale that they use at retirement. So the first 500,000 Rand you get is going to be tax-free, and then it becomes more and more expensive, 18%, 27%, 36% if you're taking more than $1 million. So you don't have 500,000 tax-free on your package and your provident fund and your pension fund. It's a cumulative scale.
Okay.
So, and if you have taken the package, you won't qualify for that same amount tax-free when you, for example, get to retirement. So you actually use up that tax scale. But it's definitely a beneficial tax scale when you need it, which is at retrenchment.
Okay, so try not to touch it if you can. Now, most people, when they're placed in this situation, Rita, might go, I'm going to cut this, I'm going to cut that, and the policies will go, and maybe the insurance, and I don't know, things like medical aid probably. What are the absolute no's? What shouldn't you do at that moment?
I would definitely continue with my medical aid. Yeah. We've been in that situation ourselves where if we didn't have the medical aid, my husband was in a car accident at that point in time, we would have been financially ruined if we didn't continue with medical aid. But you can actually go, and when you go through all your policies, you can see some of them you can make paid up, or you can go on a holiday, a payment holiday. Speak to the people who you owe money to. You might be able to go to your bank and say, well, I have been paying 5,000 Rand towards my bond, but what's the minimum that I can pay? Or is there a payment holiday that I can do? Some of your policies might actually have insurances attached to it so that it will pay
for
you
this kind of situation.
For your for retrenchment.
Okay, so that's great. And then how do you start to make a plan? I mean, if you're retrenched, like if it was sudden, you haven't been looking for another job in all of this time, how do you sort of just bide your time through there as well? Because you've got to live, but you don't know when or if you're going to get another job anytime soon.
Yeah, exactly. So that's where the budget comes in, and you start with the non-negotiables, and then you work back and say, okay, well, how long will my budget last if it's the non-negotiables that I pay? And then you say, well, so we are maybe not going on our holiday anymore. We have some holiday savings, and we can use that as well. And then just take it one step at a time. And it might not happen exactly as you plan, but most of these things don't happen immediately. We have heard of some things in the news fairly recently, but though the people in those companies have been aware of rumors and things like that, it's not something that happens in one day.
Okay, so I think for anybody who, I mean, look, the reality, it might be a reality for more and more South Africans just looking at the state of our economy and what's happening. Should you be having a sort of retrenchment saving, I don't know, fund at some point? Should we be putting, if we can, put money away for if and when we become one of these people?
Definitely. It's one of the key things when you do financial planning is to have an emergency fund. For
emergency fund,
exactly this. A very good place to save it, the first place to save is in a bank account, or you can do it in your Access bond, so you prepay your Access bond, or you can maybe do it in a tax-free savings account. If you don't use it for retrenchment, fantastic, then you've got it for something else. But I would definitely caution people to build up an emergency fund under all circumstances, between 3 and 6 months worth of money.
Okay, all right. So there you have it. Simple. What to do and what not to do if you're facing retrenchment. Don't go and cut out the absolute must. Do not give up your medical aid. That's the advice from financial planner Rita Cool, and your insurances as well. And thank you very much for your time. Sound advice there. It is